This pullback might be setting up the next move higher. Euro-dollar is sitting right on key support, and this is where direction gets decided. Ray Watterson here. Euro-dollar has pulled back sharply from its recent high near 1.1849, dropping about 1.5% as geopolitical tension picked up again. Stalled US-Iran talks and rising oil prices pushed demand back into the US dollar. That created short-term pressure on euro-dollar. But here's where it gets interesting. The macro backdrop is quietly shifting in favor of the euro. Rate expectations between the Eurozone and the US are starting to diverge. The European Central Bank is looking relatively less dovish compared to the Fed, and that creates underlying support for euro-dollar. So while the pullback is real, the bigger picture is not turning bearish. Now let's break down the technicals. Price is currently testing a critical support zone between 1.1665 and 1.1635. This area is important for two reasons. First, it aligns with the cluster of the 20, 50, and 200-day moving averages. And second, price is still holding within an ascending channel that has been in place since late March. So structurally, the bullish trend is still intact. Momentum also gives us a clue. We are starting to see signs of bullish divergence, suggesting that selling pressure is weakening as price tests support. Now the key levels. For the upside, watch 1.1722. A break above that level acts as the trigger. If bulls take control there, the next resistance levels come in at 1.1790, followed by 1.1835, and then 1.1890. But there is a clear invalidation point. If euro-dollar breaks below 1.1635 and holds below it, the bullish scenario is off the table. In that case, the correction could extend toward 1.1575 and even 1.1510. Bottom line, this is a classic inflection zone. The pullback is driven by macro fear, but the structure is still bullish. Now it is all about whether support holds. If you want clear, no-noise market breakdowns, make sure to follow. This is Ray Watterson.